So we're still retaining the same bias and the same technical picture. There is really nothing new to add. You can see that the market is still supported on that top of one support zone. We have a top of one here at that green line. We all remember it's at 1.033. We have it on the 4 hours. We can always get back to check it, but you can see that we have actually supported right on top of it, and the segregation is correct so far. This is now has completed the wave 1. It is just doing a lengthy correction into wave 2. Of course, you're looking at a 2A and some kind of a 2B, and there's still a 2C. So someone may consider, or someone may ask, why do you expect it that it's going higher and not lower? Actually, this can reverse, and you'd have a 1, 2, and a 3, 4, and a 5, and you have here a head and shoulders. Okay, and that kind of head and shoulders could still take you lower to 97 and break lower. That is, yes, of course it is possible, but not on the high degree momentum plots. So even the 4 hours so far is negative, but the high degree, the daily, is also negative. Well, of course it is possible, just like what we're saying with there is probability to move lower. We cannot negate this, but we're ready to buy at 97. We already talked about this several times. You could be seeing another leg, maybe not. Of course, I'm not saying it's gonna happen, but the momentum picture is really all negative, most of it. So you could be seeing, we're seeing movement inside of a leading diagonal. This is of course a leading diagonal. This was level 3. There's been a 4A, there's a 4B, there's a very lengthy 4C, there's a 1, 2, there's a 3, 4, there could be a 5. So if this is not going to break higher, not going to break out of that leading diagonal, we could still do 97, 0.9750, and even of course lower levels 0.96 and so on. We know how we're going to respond. We know what we're going to do when we get to see these levels, so we should be prepared for this. And over here we know that we could get all the way to 0.9750 and 9748. It's a bounce at that internal level 1. We're still seeing the same head and shoulders. Whatever, if this is going to be moving down, it's just the shoulder, just the right shoulder, and the market then will bounce at that point. It will try to do level 1 again at the neckline. Of course, we will take it one neckline at a time. So our first neckline comes in at 114. We already talked about this several times, and 116 before we move higher. That's a 12 chart. We first go to 116, then we draw back to 105, and then we move to 126, another neckline, then draw back into shoulders, and then up to 135. So we are implementing this, I believe. We talked very strongly about it since last Friday. The only thing, or the only problem, is the market never moves up. So buying at 1.05 and 1.03, we should have taken profit at 1.15. Never happens, because the market never did 1.15 or 1.16. So there's very, very low volatility, but if we're in this issue, you have to be more patient then. Anyway, if we get that correction into C, we are going to be adding at 0. It's showing here at 0.99, but in reality you can add lower at 0.9750 and 0.98. This is the same leading diagonal. You can see we can get to 0.97 gradually, 97.50 and 0.98. So yes, we can go to 0.9750. We add remaining half of our size at that point. Okay, with a stop at, if you want to raise your stop at 0.85 or 0.84, you're saying at that point, of course, double heads, the market moves will bounce at either level 1 here or that higher degree 1. We're not doing all of the level management regarding the issue, but maybe we shall start having it on our analysis, implementing it as of tomorrow, because it would appear that maybe the market will try to test that neckline, and we would have to be prepared. Okay, so if we take care of all the problems, the money should take care of itself, I guess. That's what the saying says, but the technical picture appears robust anyway, and we are expecting that same bounce at level 1. There's nothing that bounce at that level here, and you can see we're already doing a very big, very good, that if that candle does this, a 4-hour chart, if that candle does close a very robust tweezer, okay, it appears to be it's going to be a tweezer because we had a down candle, an up candle, and a down candle, an up candle, so it's going to be a tweezer candle, bounce at the top of a 1. That should be the end of that correction, or at least getting ready for the end of that correction. If you move lower again, you want to add your remaining half size at 0.9750, and then we take first target at 1.16 and 1.17. Where I believe we've already been through that analysis several times and I've almost studied it by heart. So adding here 1.17, it becomes within that first neckline is 1.17. So it is the same with Ripple.